I have with us Brij Bhushan Agarwal, who's the Chairman Managing Director at Shyam Metalics, joining us with regard to the numbers that they have posted. 24% revenue growth, Mr. Agarwal, coupled with a 500 basis point margin expansion when you're looking at it year over year. What's aided this kind of performance? Give us a sense.
We had been always very clear, like we are focusing more on the value added product. One side, other side on B2C market, how to increase the realization part, and on the other side, cost. So with lot of upgradations on the technology front, on the improvement front, these are the basic value what we have been able to add through these tools. And down the line also, if you see, like from last 4 years, we had been growing more than 20% on the CAGR. We beat volume, or we beat the revenue, or we talk about the EBITDA and all. So we will be growing in the same pace, and our projection of 2031 also we have very clearly spelled out, like we'll be focusing more on the value added. We just commissioned the aluminum facilities. We are investing on the downstream value added metals. We are adding more on the specialty steel. We are adding on the stainless steel. So these are really going to be a key driver seeing long term.
Mr. Agarwal, at the end of last quarter, you did tell us that you expected 30% growth in FY27. How much of this is led by capacity expansion, and how much is organic growth?
See, I think 60% will come from the capacity expansion because we are adding the iron facilities, which is a lot of value will be added on the organic front, on the value additions, and apart from the capacity expansion. Yeah.
Right. Mr. Agarwal, what about demand across sectors? How's that panning out? Infrastructure, railways, manufacturing, as well as housing?
Demand in the country is not a problem. Demand is growing very steady. If you see almost 7 to 8%, we are seeing the demand across all the value chain. And in the time to come also, I feel like, with the kind of growth plan, what our country is growing, this will remain to continue like this.
And you're targeting what, 2.3x in terms of growth in revenue from FY26. What kind of what will drive this kind of growth? If you can give us some color on that.
See, we are adding a lot of capacity addition is going on. Like we are putting a HR coil plant, the first in the Eastern India and West Bengal, especially. So this is going to add a lot of value to the company in the terms of capacity and numbers both. We are investing a lot of in the stainless steel business, which is going to be commissioned in next couple of years. So that is also going to be one of the key driver. On our flat product business of color coated capacity expansion, what we did this year, we should see almost double in the terms of volume in the color coated business. And the new plant of aluminum, what we commissioned just now, will take another 2-3 months to normalize, and we can see a good value coming up from the aluminum business as well.
If you can also give us a sense of the 10,000 crore expansion plan that we have undertaken, to transform the company into a diversified specialty metals player. The shifting of focus from commodity steel to high value downstream products. Can you give us a sense of how this simplifies this and the benefits that you will get from this transition?
We are putting up a SBQ plant, which is also a specialty steel plant, which is going to add a lot of value from the present iron what we are selling. We are going to get into more value added into a specialty steel, And apart from that, the present expansion in our stainless steel is a backward and the forward integration. Like more than 80% of the ingredient is going to be captive to the downstream project and is going to enhance more value looking forward.
Right. Mr. Agarwal, let's now talk about the 800 crore rupee capex on aluminum facilities. When will this come on stream and when will it start contributing to your top line?
So we have already commissioned the plant. I think in next 3-4 months, this will start ramping up stage by stage, and by end of this year, we should be able to ramp up to 60-70%.
Mr. Agarwal, you continue to remain a debt-free company with solid cash generation. What will be the cash flows for used for, barring your capex plan? What other use you are going to use the cash flows for?
See, basically, all the present capacity expansion is coming from the internal cash generation. We had been always very uh, prudent on our capital allocation, and nearing forward also, we don't have any such major plan for any bigger expansion as on date. So whatever expansion has been declared has been planned from our existing cash flow.
Right. And Mr. Agarwal, I believe that you've already publicly said that you are not eyeing any acquisitions, but in case an attractive opportunity comes your way, coupled with solid balance sheet position, what will your approach be then?
We have to see overall, yes, holistically, we have to see if it is in the interest of the company strategically, a better ROI, ROE, and long-term growth. We will definitely like to evaluate. But at present, there's nothing very serious on the table.
Okay, Mr. Agarwal, thank you so much for highlighting what the earnings in the quarter gone by look like and what really is the visibility going forward. Getting